Good morning, everyone. My name is Anthony Chow. I'm a co-founder of Agronomics, along with Jim Mellon, who I hope you're all looking forward to seeing on the stage at 12 p.m. on the main stage. My colleague Laura Turner is here as well, so please come and see us at our stand just on the top level when you've got an opportunity. So Agronomics is a AIM-listed investment company focused exclusively in this field of cellular agriculture. We've built a portfolio of more than 20 companies, each with defensible intellectual property and proprietary know-how, which have the potential to create a step change in the efficiency of production of things which have historically, for the most part, been derived from animals. This is really supported by the confluence of a number of major fundamental trends which are not going away for decades, but all centered around sustainability and the reality that we cannot feed today's population sustainably with current consumption patterns and production methods. So we are seeking to apply technology to address this. Cellular agriculture, under our definition, falls into three key verticals. We've got cell culture companies, precision fermentation companies, and then the enabling technologies for both of those, and I'll describe those in a minute. But one thing that we are not focused on, I think it's important to highlight, is the plant-based alternative proteins, which, in fairness to them, have done a great job of raising the awareness of how damaging animal husbandry is to the natural environment. But unfortunately, those products have not met consumers' price expectations, sensory profile expectations either, and as a result have not achieved the market penetration that they once thought that they might. And as a result, you've got companies like Beyond Meat and Oatly coming down from $14 billion market caps to around $1 billion today, and sales have nearly plateaued. So what we are focusing on in our self-interested view is much more exciting. Cell culture companies, this is where you take a sample of cells from any animal you choose, a cow, a pig, a chicken, a bluefin tuna. You isolate the stem cells, you provide those cells with the nutrients that they require to grow, and they experience exponential growth. They double and double and double, and then you end up with a biomass of stem cells. But the trick then is to get those stem cells to differentiate into the specialized cell type that you want. And in the case of meat, you want muscle and fat cells. But in the case of leather, for example, you get those cells to differentiate into fibroblasts, which express collagen onto a scaffold, and then you send that skin off to a tannery for use in luxury leather goods. Just cell culture companies are beginning their transition to commercialization. There is 2 products which are approved in Singapore, but the FDA just late last year and early this year has issued its first no questions letters, which is the second last step in getting these products approved and commercialized in the US. Precision fermentation, this has increasingly been a focus for us over the last 12 to 18 months. This is where you use microbes, you genetically modify those, inserting the code for the protein that you want those microbes to produce. You feed them sugars in a fermentation process, and then the organism expresses that protein inside the body. The trick then is to get the protein outside of the body through downstream processing or getting the organism to secrete it, and then you end up with your dairy protein, your egg powder, etc. This is a very well-established technology. Novo Nordisk is the world's largest producer of insulin for type 2 diabetics. They have been using this technology since 1981 to produce insulin, and prior to that, you needed 10,000 pancreases of pigs to derive porcine insulin, which diabetics then injected themselves in. Now you can produce it in industrial quantities. But the reason that we can now apply this to food and not therapeutics is because the cost of genetically modifying those organisms has come down many orders of magnitude. So instead of applying it to high-value therapeutics, you can apply it to relatively low-value proteins like dairy and eggs. This is the history of cellular agriculture. This field is relatively new, really sparked when Professor Mark Post from Maastricht University produced the first proof of concept burger, which was served live on BBC here in London. That burger cost 250,000 euros to produce. It took them until today to get the research project into a commercial endeavor, and now producing that beef patty at around €9. That is 20 to 30 times more expensive than it still needs to be competitive on supermarket shelves, but nonetheless, that is very rapid progress, and that is why Jim Mellon's book is entitled Moore's Law, a play on Moore's Law, and the precipitous fall in both the cost of producing proteins and, of course, computing power. But one of the central contentions of that book is that protein produced using this technology is going to hit price parity somewhere in the next decade. At the front end of the curve, you're going to have products like bluefin tuna, very high value products, maybe lactoferrin for infant formula, and then at the back end of that 10-year period, chicken. But it's inherently hard to predict, but the one thing that is going to make a substantial difference is scale. And here you can see there are various forecasts of how quickly this industry is expected to grow. Some very aggressive forecasts from A.T. Kearney, but a full spectrum here. And we expect that the market will be 4% of meat in 2030. But these are very, very substantial markets, trillion-dollar markets, multi-trillion-dollar markets if you include dairy and eggs into that. My colleagues and I have had the opportunity to try a number of these products. Here is a bluefin tuna product from Blue Nalu, which I have tried. And I can tell you that this tastes exactly the same as conventional products. And you can see that in terms of visual aesthetics, they're getting pretty good as well. I've had pork from 2 different companies. I've had chicken from 2 different companies. I've had chocolate, dairy proteins, egg proteins. All of these are identical, and that is the very point of this industry, because we don't expect that it's easy enough to change consumer behavior in the relevant time frame. We need products which are good enough to seamlessly integrate with supply chains and make that transition for consumers to a lighter carbon footprint much, much easier. I won't go into this slide in too much detail, but as I said, or indicated already, animal husbandry is very resource intensive. Somewhere between 20 and 30% of greenhouse gas emissions are attributable to animal husbandry. 50% of all fresh water that we use goes into animal husbandry, including the water that waters the crops that then get fed to these animals in a very inefficient cycle. And today, 70% of all crops which we produce are not for human consumption. They're produced as animal feed, which get fed to the animals in this very inefficient cycle of calorie conversion. You need 9 calories of feed to 1 calorie of flesh for a chicken. It's more than 25 to 1 for a cow, and the latest research from CE Delft think tank in the Netherlands indicates that at scale, cellular agriculture will have a calorie conversion ratio below 2 to 1. So using that technology, just for the US market alone, you can free up 600 million acres of land, which is approximately 1/3 of the entire landmass of the US, and apply that to any other productive purposes you may see fit. But then there are other issues. Animal welfare, 80 billion animals, 2 trillion fish are killed every year, and the perverse thing about the fish is that a significant proportion of those are ground up and fed back to fish in fish farms, perpetuating that inefficient cycle. The other thing is that the fish, along with the land animals, are kept in intensive, high-density farms where if one gets sick, they all get sick, so they need to be prophylactically dosed with antibiotics, which is a major driver of superbugs and antimicrobial resistance, and we do not want a pandemic that is bacterial in nature. Here are the credentials of cultivated beef versus conventional beef and plant-based. You can see that orders of magnitude, at least 1 order of magnitude reduction across greenhouse gases, land use, and water. Moving on. The good news about this industry, it is entering a very exciting phase where regulation is clarifying itself. The precision fermentation proteins are now approved in the US, in India, in Dubai, in Singapore, in Australia, and the cultivated meat proteins, we very much anticipate, although they're already approved in Singapore, will be approved this year in the US. And the US is such a large market that this is going to be sufficiently large to sustain this industry for more than a few decades. But even so, we have Japan that is likely to be a fast follower. South Korea is making positive noises And we believe that as the US approves these products, many other jurisdictions will also approve them. I just mentioned that, Upside Foods and Eat Just, they received their no questions letters in the last few months from the FDA, so very much moving towards commercialization. Very little money has gone into this sector given the size of these trillion-dollar markets that we're looking to disrupt. But the thing that has really changed since the beginning in 2016 is that the caliber of the investor participating has changed. It was originally the mission-driven investor focused on sustainability, climate change, animal welfare, but we have transitioned to the strategic investors, the protein companies themselves. JBS in Brazil spent $100 million acquiring a company, but beyond that you've got Tyson and Cargill, etc., making investments. And then you have the large financial players, L Catterton, CPPIB, EQT Ventures, and the sovereign wealth funds in the Middle East and Singapore writing very large checks as well. We've got more than 20 companies in the portfolio. The bulk of the capital has been deployed into Series A opportunities, and we have an approximate 50-50 split between cell culture and precision fermentation, and a reasonable exposure to the US market, because that is where a lot of the innovation is taking place. And I'm going to take you through a couple of companies in a second, but first I just want to tell you a little bit about our market cap. So we're 162 million pounds of assets. Our market cap is around 120 million pounds today. 29 million pounds of that is cash. So we are trading at a very material discount to our IFRS calculated NAV figure. And we believe that there is a significant amount of intrinsic value that has not yet been able to be recognized under IFRS that in the coming months that will be released onto the balance sheet through the completion of a number of financings, pretty significant financings from the likes of Meatable, Blue Nalu, Onago, and even Liberation Labs in our portfolio. So now you get the opportunity to buy this portfolio of assets that we've built over the last 3-4 years at a pretty attractive discount. I haven't spoken about the infrastructure yet, the third vertical. This here is a 3D rendering of a facility that we are building, or Liberation Labs is building in the US. Our precision fermentation companies that are getting close to getting their organisms to be very efficient don't have the requisite capacity to produce large quantities of volume. There's 61 million litres of capacity in the world today. Most of it's 40 to 60 years old. Most of it's based in Europe, where energy prices are unfortunately not economical to produce proteins at a good price point. So we are building this facility in the Midwest. We've acquired the land. We put the long lead time equipment on order. And come late 2024, when this facility is up and running, it will be immediately cash generative. Agronomics owns nearly a third of that. And we believe that the annual cash flow should be in the order of $30 million. So this is a really exciting picks and shovels play, not a bet on any individual technology, but the rollout of this sector as a whole, and really will allow institutional investors, infrastructure investors, to get excited about the broad-based adoption of precision fermentation proteins. Talking a little bit about Meatable, just to give you a flavor of why we are so interested in these companies. These are pre-commercialization, so we focus a lot on the technology that differentiates these companies from their competitors. There are 300 companies in the field. We've spoken with every single one of them because we started investing at a point when there were only 20 companies. And we believe that Meatable has the best technology platform out there, because this all comes down to unit economics, and they can get their stem cells to grow very rapidly and differentiate into the specialized cell type that we want. Muscle and fat cells is the fastest in the industry. Some of you might be familiar with a report written by a gentleman by the name of David Humbird. He put a 100-page report out saying that with these assumptions, cultivated meat does not make economic sense. Meatable have blasted through all the assumptions that David Humbird had in his report, and we think that Meatable has one of the best chances to hit price parity, or probably even below that of conventional pork production with their lead product, and then ultimately beef production. So watch this space. And then finally, in the remaining 2 minutes, we have Onago. Onago is a precision fermentation company focused on the production of albumin, the key protein that you find in egg white, 50% or thereabouts by weight. Eggs are a very large market, somewhere between $300 and $400 billion globally, and about 50% of eggs are not used in your frying pan for breakfast, sunny side up, or in omelets. The yolk and the white get separated, and the egg white is used as a binding agent in food production for cakes and other things like that. That is the product that Onago is producing. Onago has a collaboration with a company called Perfect Day, which is one of the leading companies in dairy production, but they have a specialized strain of fungi called Trichoderma ricci, which Perfect Day have spent a huge amount of money on proving to the FDA in the US that this is safe for food production. Onago is using that exact same strain and thus can slipstream behind Perfect Day in terms of getting regulatory approval. Instead of taking 7 years and $700 million, we're talking about 2 to 3 years and $60 million. So also keep an eye out for some very exciting announcements out of this company. Thank you very much, and come and see us at our stand.